Welcome to our first hangout session of the YP chat. Today we're discussing the unresolved mystery of unclaimed dividends.
So maybe remove these incentives. Let them just do record keeping. Let somebody else keep the money. Maybe you will find a solution.
Look, let's just be frank. Is this registrar model, is it sustainable? Is it profitable? There's a lot of expectation from them.
I think it's very frustrating for an investor in the market. And that's where my challenge is. Because I've done everything I'm supposed to do.
Or 2 naira dividend or 100 naira dividend where you may not be able to chase. There will be no incentive to chase. For the mutual fund, the trustees have to chase it.
Brave to buy shares started. People were really thinking about how to identify the people who were buying these shares.
Good evening, everybody. Hi, and welcome to our first hangout session of the YP chat. Today, we're discussing the unresolved mystery of unclaimed dividends. I think everybody on this chat must have had one experience or the other, whether with the most popular registrar or the most uncommon one. A lot of us have probably abandoned our dividends, having been frustrated by one or more of these guys. So, the conversation is really just going to be freestyle. Just tell us about your experiences, what you think the regulator can do, what you think these registrars can do differently. And is unclaimed dividend so much of a monster that cannot be solved in the Nigerian capital market? And I think we should start with Bayo on this one.
All right. Yeah. Thanks very much, Mimi, for the intro. Right. Unclaimed dividend has been, a front burner issue in the capital market. I was just reading about the outcome of the CMC that was held, I think yesterday. And the headline was, look, the unclaimed dividend has grew from the figures they had in December 2019. 2020, right? That's grew to like 170 billion. And you keep wondering, with all the initiatives put in place, the figure keeps growing. But one thing that I've noticed is, nobody have actually sat down to look at the cause of this growing unclaimed dividend. And I think from where I sit, I think that's the first thing we need to do. So why is this figure growing? With all these e-dividend mandates, with all the issues around trying to merge multiple accounts, figures keep growing. So where is the figure growing? What is causing the growth? And just to set perspective, this unclaimed dividend is not only peculiar to the Nigerian market. In fact, in the UK market, the unclaimed dividend is estimated to be like £3 billion, which if converted to a naira is like 2 trillion naira, right? But that is a small fraction to the size of the UK market. Right. But then what I notice is companies are taking more conscious efforts from their investors, investor relations departments to actually contact investors. Right. They have programs in place to actually contact both investors that are dead, contacting their next of kin, and even those that have not come forward. So I don't think we've seen enough of that in the Nigerian market. We've left it to the regulator and the registrar issue. I think these companies have a responsibility to their owners to actually allow them come forward or encourage them to come forward to get their funds. I think I'll just stop now and allow others views on that.
So maybe this should take me to Uroro, because you being in Lagos, you probably get to deal frontline with a lot of these registrars. I don't know that we want to go name calling, but I'm sure, having had firsthand experiences with a lot of complaints on unclaimed dividends, you probably have an idea or what you think can change something. Maybe just even if it gets the number reduced by a fraction.
Okay, thank you, Bemi. And yes, you're right. Being in Lagos puts the problem more in our faces. The truth is, a lot of people have lost faith. A lot of investors have lost faith in their ability to, or the possibility of ever regaining their dividends. So sometimes, before they even start the process, they're already starting from a point of skepticism, like, let me just even try, make a half-hearted attempt. This is not to say that investors don't do their bit, but the truth is there are challenges. You have a couple of registrars who have really done well in the sense that they've invested a lot in technology. You know, you can you don't even need to download the mandate form. You can fill your e-dividend mandate form straight on their website, and then you submit it. They are quickly able to contact your bank. In fact, there are registrars that work within a 48-hour cycle, but unfortunately, that is not the general trend. Those are just an exceptional few. The truth is, when these things started, when the whole rave to buy shares started, people weren't really thinking about how to identify the people who were buying these shares. It was more like just buy first. We'll sort out that later on, and that has now grown to be this monster. A registrar wants to know who he's paying his dividends to. You cannot take away the legitimacy of that need or of that right, because if a registrar pays dividend to a wrong investor, he will be the one to pay the brunt. He's the one who's going to, be asked to be paid, not the investor, not the client who has disappeared with his money. So their fears are legit. However, because there's an entire cycle of, let me give an example. If your bank tells you, maybe your driver's license, your means of ID for your account is expired, please come and renew it. Chances are you will not until you need something from your bank. And that's about all of us. You wonder, why should I take my time? Even if you can scan it, it's still like a bother because you don't have an immediate need for it. So when you have dividends that come in trickles, investors are like, why bother with the stressful process of identifying myself as Uro or Bajibi so you can pay me my own money? The trouble is too much. Some registrars, like I said, have actually really, really done well, spent a lot of money, invested in technology, and are helping. But now, I'm glad Bayo mentioned CMC. Said the route check is going. It may be helpful in the long run, much about the short term, in the long run, which is us trying to solve the problem of identity management. Since we don't have like a central repository for identity in capital market, registrars still have the possibility of saying EC is EC. And if it turns out that EC is not EC, it is registrar's problem, not any other person. So if by the time we're able to solve this problem, this is the general data bank of all of us in the capital market, and we can rely on it to say, then we may begin to solve the problem of unclaimed dividend. But like I said, that's a long-term solution, not a short-term. Short-term will be upping technology on the side of both registrars and the brokers who are now even trying to be helpful. Yeah. Maybe.
Can I ask a question?
Yeah.
Okay, yeah, I was going to ask, can someone, maybe Uroro or Yemisi, explain what the e-dividend mandate management system is, how it's supposed to work, and why it's not working? Because we were under the impression that the EDMMS, once it kicks off, it will be like the silver bullet to solve the whole unclaimed dividend issue. That's number one. Then number two, just because of people who are going to be watching this video, they need to know what CMC is, because Bayo referred to it and Uro referred to it as well, and they'll be wondering what CMC was that about. Yeah.
Well, will you go first? Then I can ride on your back.
Okay, so EDMMS is e-dividends mandate management system. So that's what the acronym EDMMS is. It is basically a system where you you can mandate your account so that you can receive your dividends electronically. Participants are supposed to be banks, registrars, and the investor. If an investor were to walk into my office, I would advise the investor to do the e-dividend process through a registrar and not a bank. Even though ordinarily they should be equal, it shouldn't matter where you went. The challenge is because a bank is not first a capital market operator, and the EDMMS process is not his primary, what's the right word to use now? It's primary concern. It's secondary to him. So if I were to put in a process to make it work, that will not be my first time to qualify with a bank. So EDMS, you get a form. You get a form either from the website of the SEC, the website of the registrar, or where else? Sometimes a broker. So you fill that form. You identify the shares you have, you upload that form. No, you don't upload the form. You submit the form to either a registrar or a bank who can upload it and share information with the other party, meaning that if you submit to a bank, the bank shares information on the platform with the registrar. If you submit to a registrar, the registrar shares information on the platform with the bank. We've had issues about signature irregularity being the main problem. Why is it the main problem? It's a problem because the investor's signature is the primary identifier for registrants. This is what the registrar will primarily use to identify you. We've gone the route of saying, can't you just use an investor's BVN? BVN should be unique to an investor. And even though there's reliance on that to an extent, you have issues where there's still information clients provide on the BVN portal that are different from what they provide to the registrar. I'll give you an example. When you filled your BVN, when you did your BVN registration, you signed the signature, you probably put in an address, some other identifier. You did the same thing when you bought shares, maybe with your broker or registrar if you did a public offer. When there's a significant difference, the first thing the registrar will check is your signature. And a lot of us, myself included, do not have a regular signature. I'm sure some of us have changed our signature, maybe like God knows how many times. So it brings us back to the problem. If an individual registrar has the ultimate responsibility of identifying an investor, we will continue having problems with dividends. If that responsibility doesn't lie outside the registrar, we'll continue having the same challenges we're having now, unfortunately.
So, Bemi, so should I just continue from where?
Yes, please.
And then probably now put in my own 2 cents to the conversation. So, like Urora said, the major issue is identification. We always come back to that point. I remember there was a forum that I attended towards the end of last year. It was like an interface between the executive team of the SEC and then the registrars, basically. And it still came down to that. The registrars, when they are not, so I'm going to come back to that point, but now we are assuming that they are willing to cooperate, they are willing to solve the problem, and we are looking at it objectively without any bias, without looking at their conduct, because that's another issue I'm going to bring up. The truth of the matter is they gave accounts of how they had to go and defend so many things at EFCC and all those things, because even the process itself of being mandated, of getting into that EDMS system also has some risk. So if you onboard a fraudulent investor, you've created a problem. So they're being very, very careful. And another part of it is that, so because, okay, now maybe going forward, they ask for BVN, but for the legacy accounts they have, like Roro said, the primary identifier the signature. So they still had that long process of, oh, you have to indemnify us, oh, you have to confirm that this is your signature. So imagine the process starts with the registrar, who is supposed to have the primary documents. He should be the last person where everybody is coming to. You start with your registrar. Your registrar still tells you that no, the signature they have on file is inconsistent. Go to your bank, let them confirm. And like Murara had also mentioned, so you have, I mean, for people that were just buying 5 units here, 10, you know, those days of everybody just buying all sorts. So I have dividend of 20 naira, 50 naira, 100 naira, even 300 naira. Look at the effort it would take me to first go to my registrar, who disturbs me and tells me to go to my bank. And then I probably need to pay for that confirmation from my bank, maybe 2,500 naira. You get what I mean? So at the end of the day, the investor just says, you know what, this is too much for me. So if we solve, so I'm getting to my point. If we solve the problem of identification, it helps us going forward. But we still have the legacy problems. Now, the legacy problems are, there's also something I've always said. We would always have unclaimed dividends for some people, forever and ever, amen. Unless we take the hard decisions, which would be, you know, all those multiple subscriptions. The SEC had given a number of extensions of the grace period. Come forward, regularize. We will not take it as a crime. Everybody has forbearance. They've done that, extended it. Are we asking ourselves, why do we still have these problems? I'll give an example. So a long time ago in my life as a regulator, we went to inspect a particular capital market operator, right? We realized that, so at that time, they were working within a financial conglomerate. So they had a banking arm, they had registrars, they had stockbroking. So everything was intertwined. It was just, you know, and there were no firewalls as it were. During the time that the bank was trying to do its public, its IPO, so the bank essentially was selling the subscription forms at their banking halls, at their branches, to walk-in customers. So they'll just say, come and buy, come and buy, come and buy. Now, those people had no idea what they were doing. They just said, oh, buy our stock. They used the address of the bank as their address. Years down the line, dividends are being paid. Now, the bank's subsidiary, that is a registrar, is the one that is keeping the register of the bank, has the records. But you have thousands of people using one address, the bank's address. They can't find these people. So you know what they do? They batch everything that has the bank's address, move it to the stockbroking subsidiary. What do these ones do? They process it through the bank and clear the dividends. And then I don't know what audience this is, but I believe, but I'm not mentioning names anyway. And then they're actually getting value. So the bank now, what they did was, okay, so that in future, if this person comes to claim his dividend, they are now warehousing it in a particular account. So many things have gone wrong in terms of compliance. But the point I'm trying to make is that, so this is one case we saw. But imagine all over the country, in several instances like that, for people that don't have the luxury of having a bank that can clear the dividend payments. Imagine how many dividends have just been going unclaimed for years. And as long as these people remain shareholders, as long as the company continues to pay dividend, these people will always have unclaimed dividends. Nobody is going to come for us to come and claim anything. People that can't remember that they even bought shares. So that is one problem. And unfortunately, the forbearance is not even going to work in this instance. Maybe it is when I remember that I have something that I'll say, okay, so they'll tell you, bring any evidence you have that you actually made this purchase. Years ago, I walked into a bank. I've told this story before. As a copper and I was serving in a bank, I marketed shares of banks that way. They will just bring all the subscription forms. I did not know what I was marketing. So tell me, people that had no clue, how would they even know what to come and claim? They've tried to say, people have postulated like in different and made different suggestions. Oh, okay, maybe what they should do is the government should take over. That comes with its own problems. But I feel that if you solve that, or maybe at least segregate those legacy issues, put them aside. So let's deal with the ones that we know that, yes, these are actual people who are frustrated by the process. Let's make the process easier. Let's hasten our move to solving the identification problem. Then maybe, so you know that, okay, when you isolate those ones, you know that, okay, this percentage is the ones we cancel. Then you going forward, you solve the problem. Instead of lumping together and knowing that there are some things that will never be resolved. I'm sorry. The second point I want to make is that we also need to remove the incentive from the registrars to hold on to funds. The SEC had tried to do this thing a long time ago by introducing the move 90% of unclaimed dividends. Please correct me, is it 15 months and older or something? Yeah, move it back to the paying company, right? But there's still 10%, and that 10% is significant. It is significant. We have seen a case where at the point of that, that announcement by SEC, the registrar cleverly diverted all those 90%. That alongside, so all the companies that are probably more bound, that have not paid dividends in years, that their shareholders have even forgotten that the companies exist, conveniently diverted those funds. Another issue that we're not talking about is unclaimed monies. We've not even started that conversation yet.
I think that's a conversation for another day.
Do you understand? So they now move everything, right? And then they perfect it in such a way that after that financial year, you will not see that trace again in their books.
Move it to where?
Diverted it.
That's the word, divert.
That's the word. They diverted it. So those are the two things we need to solve, in my own opinion. Solve the problem of, so number one, isolate those ones that are the multiple subscriptions. Let's have them in a pool. Number two, for these ones, we've identified that identification is going to help our problem. If whatever we have to do, if we're going to just make BVN the sole identifier, let's get into talks to ensure that that's what happens. Then the third thing is, I keep on saying it. What's stopping you from saying that? For funds, you have trustees, you have custodians. Maybe introduce the custodian model. Maybe. So the registrar ordinarily, his work is to keep records now. You are not a fund manager. Why are you holding on to funds? So maybe if you don't have the incentive to hold on to money and manage it and take because even the law, there are some loopholes there that they are capitalizing on. The rule says that you should manage it in an interest yielding account. Nobody tells you what happens to the interest. And we've done our analysis that, okay, the interest is what is actually the source of income for the registrars. So maybe we move these incentives. Let them just do record keeping. Let somebody else keep the money. Maybe you will find a solution. Thank you.
So Elizabeth looked scandalized a lot on it. And I want to take Elizabeth back to a point that Uroro made about, registrars simplifying the process. And I know that a couple of registrars, and I think when it comes to speaking about the good parts, that it's okay to call their names if they've done well. Elizabeth, I know that you have had experiences with a couple of registrars trying to claim your dividend, even for the ones who have simplified processes. But is there any particular one that stands out, like which was stressless for you?
Sorry, I don't think we should mention any registrar so that we don't endorse any particular company.
Yeah, that's fine.
But
in terms of maybe a registrar without calling their names, that if you find that there was a process that worked, and just so we can see if there's something that registrar did that can be modeled for other registrars without mentioning their name.
Okay, thank you so much, Bimi. And I think before answering your questions, I think I also wanted to just expand a little on some of the things that MEC talked about. So for me, I'm not so worried about, okay, yes, there's a legacy issue, which is going to take a lot to solve that. My challenge is there's a legacy issue, but what are we doing with the current for the new investors that are coming to the market. Because until you solve the issue of the new investors that are coming to the market, then you then find a way to, solve these other legacy issues. The truth is, some of the legacy issues may never be solved. There are some of them that you probably won't be able to solve it. So I'm not so worried about that. My challenge with unclaimed dividend is the fact that even till today, even after you have gone through the EDMSS process, right? You have done everything you are supposed to do as an investor in the market, you still get frustrated down the line. And I'll give myself as an example because I've had this experience. So my first contact in the market is the broker, for instance. And my broker, I have done my KYC with my broker. In fact, there was a time where the account with the broker will be blocked because they say you haven't updated your details. So even after updating my details with the broker, and then I still, because I understand the way the market works, I still go to my broker and say, okay, I know I'm supposed to fill the share mandate form or be the transfer mandate form. I fill mandate form. I follow up. The broker say he has submitted it. I say fine. I say I know I still need to fill an e-dividend mandate form. So I go to the broker as well, fill all my forms, submit it to the broker, and then still go to the registrar's website one after the other and do my bit. Some of them I take the form to the bank when we're still working physically, and then thank God to some registrar, they have simplified the process now that online you can just log on to their website, fill the form online and submit it. But at the end of the day, I still don't get my dividend into my account when the dividends are paid. And then I have to be calling the registrar one after the other to follow up on my dividend. I think it's very frustrating for an investor in the market. And that's where my challenge is. Because I've done everything I'm supposed to do. There was a registrar I had an issue with. I called almost 5 times. And they kept telling me, okay, call back tomorrow, call back tomorrow. And it was so frustrating for me. And that is where you will see an investor where if his dividend is 1,000 naira, how much did he spend to call the registrar? So why do I have to call 5 registrar, 1,000 naira dividend just to go through that process? It's frustrating because I've done everything I'm supposed to do. At least I myself am an educated or I'm an enlightened investor. I've gone through the process. As tedious as that process is, I've gone through it. So why am I still frustrated? And this frustration is part of the reason why the unclaimed dividend situation is allowing in the economy. So something must be done. People must understand their fiduciary duty to the investor from a professional perspective. And what the regulator is doing, I know the SEC is doing a lot because the SEC has said once your account has been mandated, you've done your KYC through the bank, then it should flow straight to the registrar. At least as I'm being onboarded today as an investor, I'm not talking about legacy issues where they had data issues and integrity and all that. But today, as an investor, if I'm coming to the capital market, I'll provide my BVN, I'll provide my valid address, I'll provide my bank account number, I'll provide everything that needs to be provided. That information will flow to CSCS. That information from CSCS will flow to the registrar. And then I'll still go through the process of filling an e-mandate form again and still provide that same information of my bank details to the registrar. And at the end of the day, I still don't get my dividend. I'm not saying all registrars are like that. But at the end of the day, one person does well this year, the next year you find out that you are having to follow up. So the question is, there's no consistency in that process. And that's where my challenge really is. So the challenge is not only the legacy issues. The challenge is even for the millennials, the new investors that are coming into the market, the process is so tedious for them. And it's because maybe I have very few shares. Maybe I have 1 or 2. So I can actually go through that process. So imagine if I have shares in 20 companies. Will I be calling 20 registrars? I'd rather take my money out of them. No, because it's not worth it. And maybe I'm not using a custodian. Maybe I'm not using a fund manager because maybe I'm not yet a high net worth investor. But we all know the place that retail investors, the role that retail investors can play in the market. We've seen how retail investors have come together to move markets, even in the US market, in the US. So their role is increasing day by day, and technology is giving them that opportunity to play a more active role in the market. So we must we must find a way, the SEC, the players in the market, they must find a way to make that process seamless for an investor. If not, why should I be able to invest in the US stock market and not I'm not worried about dividend because the dividend just flows through my account, and I'm investing in the Nigerian market, and I'm going through this tedious process of having to, and that's because I'm actually following through. So if an investor that maybe just invested his 5,000 naira, and why will he invest the next 5,000 naira? Why will he invest the next 5,000 naira? Because he wants to see the benefit of what he has invested. And it's not until he starts going through that, following through that process. We have to find a way to make this thing work. I think that would just be my submission at this point. Let's separate the issues, because even new companies that have been listed recently are still having unclaimed dividend issue. And you're wondering, the company just got listed 2 years ago, and by the time he got listed, he onboarded his clients newly, and that onboarding process requires a KYC process, which has all the details. Why is that company still having unclaimed dividend in its register?
So, I mean, there was a comment that Elizabeth just mentioned, and Patience, this probably brings me to how we don't have things like unclaimed distributions in the mutual fund space. Is there something they're getting right that can be modeled for the public companies? Because, I mean, the same investors in mutual funds are the same retail investors in shares trading on the exchange. And when it's time for a distribution, it hits my account. But then the same shares, declare dividends and nothing hits my account. Same market operators, in some cases, just operating through different subsidiaries. Is there anything that can be borrowed from that space?
Yeah. So Yamisi actually said it really. They don't have any incentives to hold money. The custodian is the one that holds the money. All the registrar does is administrative. They just do the paperwork. These are the people who are unit holders or shareholders as at so date, and they are entitled to dividends. And then the fund manager authorizes the custodian to credit those accounts. In fact, I'm not trying to take away business from the registrars, but for most of our mutual funds, they don't even use registrars because the registrar role is purely administrative. So fund managers, they just have a desk for that. And so, money is with the custodian. Registrar does not holding on to monies. So there's no incentive to not distribute dividends. And of course, the identification process also is properly streamlined. I mean, once you complete your forms and your subscription forms, all your information is there. You are required to provide a bank account details, an email address, because the whole idea is we've told fund managers no more distribution of what do you call it, dividend warrants. Once we see it in their originating documents like their trust deeds or their prospectuses, we tell them to take it out, that every investor should provide a bank account, no dividend warrants, nothing, no check self. We don't even want any paper. Everything should be electronic. So we don't have issues with that, to the best of my knowledge. Yeah.
Okay, maybe if I may just jump in here, right?
Sure, you can jump in.
Okay.
All right. Okay. And another thing we need to look at it's the current market structure, right? I know for mutual funds, you only have to deal with a particular market operator, right? You basically interface with the fund manager. The fund manager onboards you. The fund manager does not keep the fund, right? But the onboarding process happens with the fund manager. The fund manager determines the net asset value and if there's a dividend or if there's a return. And instructs every other player to distribute the return. In other clients, for the stock market too, once you onboard through a particular broker, it is even the name of the broker that would be, on the registrar's list. Yeah, that's by the nominee structure. In the sense that once dividend is being paid, they credit your broker, and the broker is in charge of how you distribute it. Two is those that are under its management or custody. However, we have a different model or an hybrid model in Nigeria, whereby investors are permitted investors are permitted to actually deal directly with the registrar. Their names appear on the list of registrars, right, as a shareholder. So the model with the mutual fund is slightly different from what we have in the current capital market structure. So to address that, we'll probably be looking at our structure, which I know is a very complex matter to deal with. But back to the issue of Elizabeth, right? I think from a design effectiveness point of view, the regulator needs to look at the process on the market, right? A typical millennial loses interest, above 8 seconds, right? Even this banking app, they've done it in a way that, look, once your process of getting through to my account is tedious, people just dump the account. I've done that for many banks. Once I noticed that the process of sending a transfer, and that's why some banks even have quick transfer these days to a particular limit. So back to the issue of liability, I think there is the market too needs to be dynamic, right? There was a bank, I won't mention their names, when they initially started. Once you have a balance of 5,000 or 10,000, or you want to withdraw 5,000, they authorize their paying tellers not to even check your signature, right? Because people that want to commit fraud will not come and commit fraud on 5,000. And even if they commit fraud on 5,000, trust me, to the bank's balance sheet, it's infinitesimal, right? So I'll be surprised if registrar is coming with the argument of liability for a dividend of 2 naira 50. It doesn't just make sense. Who wants to commit fraud on an account? And that's why I'm saying, look, this issue of unclaimed dividends, we're throwing out figures. Let us know the components of these figures. Like you said, there are legacy accounts. Which ones are legacy accounts that we know we build up? Which ones are the new entrants in the market? I don't expect someone that bought shares on the secondary market, because if you're approaching the secondary market, that means you have I don't want to say you are an informed investor, but you know what you're doing for you to say, look, I want to buy shares on the secondary market, because you have probably approached the broker to do that. So I know your broker should have an information. So I'd be surprised that someone that bought shares on the secondary market is still having unclaimed dividend. How? And maybe the identity management will solve a lot of issues if it's centralized. But trust me, if you still have this issue of how to dimension the liability across the board, we'll still have that big elephant in the room. If the complaint is still, look, there are incidents of fraud, then we won't have brokers, or we won't have registrars onboarding people into the centralized system, because of course, if you're on board, there's a level of liability that comes with it, right? So probably from the design effectiveness point of view, filling different forms with the broker, I'm not sure how sustainable that model is. If you tell me to fill form with like 5 registrars just because I want to mandate my account, trust me, I won't do it. I won't even bother. And that's just the truth. Or you start asking me to go and bring one letter from a bank to confirm my signature. In fact, I don't even use signature to operate my bank account anywhere, right? I can count the number of times I've entered the banking hall in the last maybe 5 years, right? And I transact businesses, right? So the issue of confirming signature, I think it's peculiar to the financial institution, not to registrars alone. So I would not rate it as one of the key issues here. It's just probably people are not innovative enough to solve this issue, right? Let me just stop for now.
So I have a question on that mutual fund and structure. So I want to ask, is there an incentive for the registrar to pay the asset manager's dividend than to pay the retail investor dividend? Because assuming, let's look at the mutual fund that has an equity fund, right? So the name in the book of the company will probably be the asset manager, right? And so the registrar will still need to pay that asset manager the dividend that flows through from that security. Now, is there an incentive why the registrar will not withhold that dividend? He will pay it, but for the retail investor who has still done the same thing, there will still be a delay in paying that retail investor, because I believe the asset manager, the asset manager has the name is in the register of the company because he has bought shares there as well. Just confirming that.
Okay. So there are 2 layers. So there is the fund layer, and then there's the layer where the fund is investing in companies. but it has to be like an equity fund, for example, like you mentioned. But don't forget that for most of our equity funds, the strategy is active management. So I doubt that they even invest in shares long enough to be getting dividends on any shares. That's the first part of it. And then even if they happen to invest long enough to get dividends from their investments, it's not the name of the fund manager, it's the name of the fund/trustee that will be in that account, that will be the CSCS account or whatever it is. And so it's actually part of the trustee's job to ensure that all corporate actions, dividends, and the like are paid. It's their job to make sure it is done. So unlike your 2 naira dividend or 100 naira dividend, where you may not be able to chase, there will be no incentive to chase. For the mutual fund, the trustees have to chase it. They have to make sure that it is paid. So that's what they are paid for. They are paid to ensure that everything that belongs to the fund gets. But like I said, for most equity funds or even balanced funds that have some exposure to the equities market, it's active management strategy. So I'll be doubtful if most of them invest in shares long term for the purposes of getting dividends from those shares, depending on their strategy, really. That's why I believe.
And I mean, maybe I should just. Maybe I should. Okay, yeah, Mr. Go on.
Baby is even muted. Okay, so exactly like you said. So I think it's the same market, and then one segment of the market seems to be working seamlessly. So, in my opinion, it's going to be the toughest for me. I think it's going to be one of the toughest decisions the SEC would be making. But I mean, they will see the difference. Don't allow registrars manage the funds anymore. They don't have to. They don't have to. I mean, when during the subscription process, there were receiving banks. They were receiving banks. It didn't go through the registrars. So
Exactly.
the company got its money from the receiving banks and not the registrars. Now that it's time for distribution, must they be the ones to manage? They are not banks, they are not fund managers. They're just, like you said, it's administrative, keep the records. And I think another thing why we get different levels of services from different registrars is because that's another conversation. So there are tough decisions, and it's another conversation, which is that maybe minimum capital is not what we should use to judge the strength of a capital market regulator, capital market operator, especially somebody like a registrar. Maybe we are looking at the wrong metric. Maybe what we should do is we have to look at your technological investment. How innovative are you? Because you need to invest heavily in the infrastructure that will help you have a seamless process from onboarding to the time where you have to actually administer the distribution. So if you say, okay, this is what you must have, do you understand? This is what you must have. I mean, you will download form, you will fill, you will take bus or take Uber or drive down to their office for what you downloaded. What you downloaded, though, you take it there. It makes, I mean, so like Bayo said, we have to get to that point where, and I know that the SEC has been, I know that new management has been talking about, how they want to make the market attractive, how they want younger investors to come on board. But like Bayo said, if you don't make it seamless for them and automated, you're not going anywhere. So those two things, number one, don't let them manage the money. Nobody's taking their jobs from them. They are registrars. If you look at their terms of reference, maintain the register, coordinate the AGM, coordinate distribution. You do not necessarily need to manage the money. You don't have expertise in managing the money. So remove that from them. Give them technological standards. I know that the NSA had been trying to do that with the SEC. I know it's something that was before the rules and everything. Maybe when you now have those minimum technological standards for a registrar, your system should be robust enough to do A, B, C, D, E. By now, every registrar should have an app. By now. So if we do all that, I mean, so like they said, going forward for the live investors and live dividends that are being paid. Let's solve those ones first. We'll now face legacy issues later. And then when SEC is now really now numbers for unclaimed dividends, they should just have it in categories. Legacy is so amounts, bam. But for the ones that we are dealing with now, this is what we've been able to solve. This is what is, as in, and then give them tough deadlines. I mean, okay, so this is the last thing I'm going to say before, so that I don't take all the time. But I know that when they gave the instructions to stockbrokers to update the information of all investors, it was being coordinated with CSC, and they were giving updates. Now, it's funny because at least I know that people around me that actually had stockbroking accounts, people that were working with the regulator, had not gotten phone calls from their stockbrokers to come and update their records. But the stockbrokers are meeting with SEC and saying, please extend deadline for us. We don't have we can't contact them. We don't know where they are. Do you understand? I mean, there's so many things that are just inconsistent. So let's get to that point where you have enough technology. If it means that there's a centralized database where I log in, as I'm putting all my information, everybody that has me in the market, that has my BVN, it syncs. So you have one unique identifier. Let it sync. Let's solve that problem first. And then we'll now know that, okay, the legacy is what is left.
Yeah, I agree with you, Yemisi. And I've also wondered why brokers have not taken a more. I mean, I know at some point my brother and I were willing to actually pay our brokers money to chase up our unclaimed dividends for us. And it's amazing how the brokers are not even interested in providing this service. In the US, I know they have the dividend reinvestment plan, and you just get your distributions through your brokers. It's surprising that brokers, or is it probably something that they need the regulator to officially, commission and say, okay, brokers are allowed to do this as some form of agency and earn remuneration from. I would like to think that might cure a lot of things if the brokers know there's a form of incentive to help their clients get some of their dividends paid to them, And again, this probably also
is it a common issue?
Regarding because I'm just paying a broker as my agent,
No, but I think the brokers are allowed to do that. I think they are.
So they do it.
Now.
They do it for.
I've paid a broker before, but he just submitted my dividend mandate form. He didn't follow through to get the dividend through. After he charged me 1.15 or 1.8 or some amount like that.
So I know they do for big clients, right? Because I've seen a proposal from a broker to say, look, a state investment holding company that, look, let us help you consolidate your account. Let us help you chase your dividend. So, I mean, I think it's a cost benefit issue, right? And that is why for retail investors, that may not work. Right. But I mean, I think there is a big elephant in the room, right? And Yemisi tried to allude to it. Look, let's just be frank. Is this registrar model, is it sustainable? Is it profitable? There's a lot of expectation from them, right? And I'm probably wearing my consulting cap now, right? What is their fee structure like? Because I've looked at it hand to hand, and trust me, I'm not sure. I mean, from the money of because I know there is a one-off charge for their dividend distribution. It's probably an administrative charge for their AGM, which the depository are even competing with them now on. And I'm wondering, I mean, do we even really need the registrar in this market? Yeah, if we need them, is the cost model? Yeah, is the cost model sustainable? Because if there is a lot of expectation from them and the cost model is not sustainable, trust me, I mean, you just be paying lip services to this thing. And I think that is affecting other market intermediaries as well, right? Because you look at some people, they are not really, I mean, doing the core capital market function, right? And that is affecting market development, whether we like it. So, I mean, I think that's another conversation the FCC needs to be having, or be looking at. All these multiple, do we really need to segregate this market function to be profitable? Should we look at method of probably having a universal license? I know Goldman Sachs in the US, for instance, they have a stockbroking arm, they have an investment arm, they have a banking arm, right? And that is how the business rubs off on itself and is sustainable. But I know there are some market operators in Nigeria that are not permitted to even do some other things. So we need to look at if these models are not sustainable. Trust me, if they are not sustainable, they'll keep on holding on to that unclaimed dividend because that is the only lifeline you have.
So maybe I should draw everybody to the conversation on fintech. Is there a way fintech can help us on this subject? I don't know. Should we start looking for new entrant type of registrar firms that leverage on technology to resolve these issues?
Yeah, but like Bayo said, which is a conversation that I think that needs to be had, like he said, it is. So what exactly would that fintech be doing?
Exactly.
Do you understand? Because they are in business to make money. So like he said, we've done the analysis before a long time ago. Like a lot of them were unprofitable when you took out the interest interest income they were getting. Now this is interest on money that is technically not theirs, right? If you take it away, they were running at a loss. So are there other services that they can provide? So we need we're talking about, okay, this is the future. Maybe data collection, record keeping, some type of depository of information or data or something. Maybe they should come forward. And I also think that the regulator cannot always be thinking for them. And I think they become so lazy over the years where they were okay. They could go to sleep on the dividend and on the interest income and not do anything else throughout the year. Just pay salaries, share bonuses at the end of the year and go and sleep. So they've not been moving with time. They've not been innovative or thinking of how they can survive. So now that this conversation is coming up, and I'm sure they've thought about it too, what are the other things they can do that will not be at conflict with the capital market function they are performing? Trust me, if it's keeping records, by the time all of them have the right technology to do this work for them, it's at a press of a button. The only thing that requires like daily management is when they have to interface with the CSCS every day for trades that are settled, when people are buying and selling stocks and the name on the register has changed. That's the thing that is like ongoing that they do. But beyond, and that one, I don't think they have to physically go to Marina to go and get it sorted out. It's through a software, I believe. So what else can they do that will keep them in business?
I think if the registrars are able to automate, I think the whole process from start to finish should be automated. So if I can sit at the comfort of my home and open a stockbroking account and my KYC details is correct and it is sent to CSCS, don't forget the CSCS claims, or should I say the model CSCS is running, or let's say from the stock exchange perspective, is that every investor has a unique identifier, which is a CHN, right? So I have one CHN, even if I have multiple accounts with different brokers. Now, if I have one CHN and that CHN can identify me with registrar A, registrar B, registrar C, or even, the funny thing is sometimes even with registrar C that is managing three companies and I have shares in the three companies. If I have not mandated specifically in those three companies, you can pay me for company A and not pay me for company B and C. Meanwhile, you already have my details in the register of company A. So if I have one CHN, that should be able to flow through the register for three companies in which I'm invested in. It should just flow through seamlessly within your record, as long as it is tied to that CHN, right? It's tied to that same CHN. It's the same investor. You can confirm that it's the same investor. So this risks averse that registrars say they are being, the liability and all that. Then that means they are not confident with the record, maybe even at the CSCS level, to say. So maybe there's also that problem. Maybe there's a problem of people don't trust the data that we have. But
I think we have trust issues.
Yeah, but
because we have data issues
that
as
can
well.
be solved is at that broker onboarding level. That's why the broker has a duty of KYC, right? And so that is where if you ask me, that's where that liability should start from. And once you can identify me with the same CHN, I don't see any reason why I should have to be mandating my account with you all over the place. In fact, once my account is mandated at the CSCS level, which it is, because it is at the bank. The broker has my account. That information, at least from what they've told us, flows to the CSCS, and the CSCS also claim it flows to the registrar. Every day there's a transaction is being updated. Why is it that then at the click of the button, once that that money is paid to the registrar, then at the click of the button, at least everybody's account should be paid immediately, everybody with a mandate. So that means the registrar themselves are either not updating their records properly with what CSCS sends to them, or maybe CSCS is not transmitting the right data. I mean, there has to be something that is wrong in that.
That's systems. See,
Lizzie, that process is on paper.
If you call registrar A at 10 a.m., I'm sure Uroro may probably have insight into this. If you call registrar A at 10 a.m. to say, the Senate is asking for your figures as at December 31st to 2020, your unclaimed dividends 10 a.m., they'll give you a figure. The same registrar, you call them at 1 p.m., they'll give you another. In fact, by 4, another person is calling you frantically to say, we are sorry. Please disregard what we sent. We will send you another one. So I still think the problem is, their systems are obsolete. A lot of them.
Yeah.
Some of them have invested in technology. Some haven't.
Okay, Aurora, you want to have one last word before we wrap up?
Yeah, so,
I'm not sure this mystery is going to get resolved today.
No. If you're hoping for a resolution, I'm sorry. I cannot promise you that on this call. But the truth is, so we've said a lot of things. This is not a problem that can be solved by one party. The reason I say it is, it's a bit of this and that. So let's say, let me see the example of a registrar asking you for a banker's confirmation. And that outrightly is a violation of the entire process, because that is like going back in the back. Right? The registrars do that. Unfortunately, some do. Some still flout express directives not to do these things. The bad thing is, you can also rule out the fact that there is still fraud going on very regularly. You cannot rule out the fact that registrars also do not get, I'm glad Lizzie used the word claim, they said, do not get very accurate data from the different sources of data they get them from. So whether it's brokers or CSS, I'll give you an example. So I'm looking at a loop, right? I'm looking at an information sharing loop from point A, where the information is collected, to point C, right? And the information is transmitted correctly to point B. And from point B to point C, the information begins to get distorted. And I'm telling you, or maybe out of 20 data sets, one is distorted. I'm saying maybe a data set of about 15,500. There's distortion with like 2,000, 3,000. That's significant. I will not rely on data. I will still know what the SEC said we should collect this data. We collect it. We will pick. We'll stay safe and say, please, if you want me to take your data, come and meet me. It's unfortunate, but that's where we are now. Because there's not one party that has their act together yet. Even the parties who claim they do. Does that mean all hope is lost? No, that doesn't mean all hope is lost. And the other part of the building the hammer, the stick, and there's a way you will keep beating on someone's head. At the end of the day, there's nothing left of the head. I'm not in any way saying parties who go against directives shouldn't be dealt with. But I'm saying the important thing is a lasting solution. There have been times where, like Lizzie's example, you will see registrar that mandates your account for company A and doesn't mandate your account for company B. And the reason he's giving you is that you did not indicate company B on your e-dividend mandate form, which doesn't even make any sense. Right? Because I forgot to choose XYZ PLC. I probably don't even remember I have that account. You are my registrar. It's supposed to say, excuse me, I see that you indicated ABC. What happened to XYZ? I'm like, oh, I have that. I probably don't remember because maybe I've never earned dividend from them or something. I know mandating your account doesn't mean you get dividend. If they not pay dividend, so let's just also have that. But the thing is, it's a lot of this and that. We have a lot of registrars that still do a lot of mischief. You mandate your account today, they'll pay you for your current dividend. They won't pay you for backlog. They say, come and fill a form for backlog dividend or whatever, call it something, right? I mean, we have that. And then when I tell a friend or someone, okay, when you're sending an email to XYZ registrar, copy, it's not my business. Copy me so that they just see at sec.gov.ng. And then the response of them say, oh, okay. And then they get it. Why? It's unnecessary, right? There's also the route of saying the information that Registrar A is getting from this party is flawed. Okay, Registrar A, when you're corresponding with this party and complaining, copy me as SEC. And then you see that the response the registrar gets from that party is fantastic. They now sit down and check and cross. Why? Okay, so there's still a lot of this. And if I say it's one problem, I'll be telling you a big lie. I think our biggest takeaway is the need to separate issues that can be resolved and issues that will take some acts beyond what we currently can. Registrars you have some registrars that actually do some other services, probate services, investor data management. In fact, if you notice, the registrars are even changing their names now. You hardly see a registrar that just bears registrar. You see XYZ registrar and investor data services, XYZ registrar and probate, because they actually begin to do a lot of things because the interest earning income line has been slashed significantly by reducing the amount of unclaimed dividend. It's not completely gone. I mean, taking away 90% from 100% is a big deal, but it's still there. And yes, the SEC cannot think for us. I mean, it's bad enough that we're both developing and regulating the market, right? But to now go down and tell you how to cook your pot of soup, I mean, that's like a bit much. So yes, it's a lot of different things. And then I'm yet to see that party who has got his act together 100%. I may be wrong. I mean, I don't know everything, but I'm yet to see even the so-called technologically savvy, everything. You will be shocked. The data they spool out, and these are people that have been 1 month, 3 months, and pointing fingers at the other guy at the back. Okay, so I believe it's actually possible to separate issues that can be resolved in the short term and those that will need some other long-term intervention. I believe it is very possible. For example, the company I just listed, right, and has unclaimed dividend, it will be difficult for you to convince me that that is not just a sheer case of mischief. It will be very difficult to say that that's not just a sheer case of mischief, because you should ordinarily have bank account numbers for these are it's not even an old 2 years, 3 years, 4 years, 5 years, ordinarily. Okay, so I think that's maybe our best bet go forward, so that at least let's know that the quantum may not significantly drop, but at least the rate of accumulation can actually begin to slow down, if not stop. So yeah.
Guys, I think it's been an interesting evening. Clearly, this is going to remain an unresolved mystery. I think we've tried to demystify a couple of things. We've talked about technology. We've talked about the incentives. We've compared them to the mutual fund industry, and I'm sure that the one thing that is clear is there's still a lot to be done on the part of everybody: the depository, the registrars, the regulators, and I mean, even the investor probably in taking more active steps in following up on our dividends. But the one cheat sheet that has probably come out of this is copy an email address when you're chasing up your dividend. I think I told Elizabeth about that. You just put sec@sec.gov.ng, even if nobody replies from sec. The moment the registrar sees sec@sec.gov.ng, they respond to you or I got my dividend the next day. And I just tried that with one registrar and it worked. I tried with two actually and it worked.
The registrar watches this, you will know the secret.
Well, so but then we probably start copying the DG of SEC.
You will still have to comply because he doesn't know who is watching. So
Yeah.
I don't want to be the
So guys,
scapegoat, right?
yes, you never know. So it's been an interesting conversation, and we look forward to the next chat series with everybody. We'll probably be moving on to another topic away from dividend, and if the tide blows us back to the issue of money, maybe on unclaimed monies and back to the subject of registrars again. But thank you, everybody. Thank you, Elizabeth, Bayo, Uroro, Yemisi, and Patience. It's been nice having you on this episode.
Thank you.
Have a good
Thank
evening,
you.
everybody.